Hey everyone, welcome to The Explainer. I am so thrilled you're here today because we're jumping straight into a frankly fascinating 2026 market analysis from the folks over at Land Limited. We're looking at the pretty bold argument for why raw dirt, yeah, literally just plain old earth, might actually be the absolute ultimate asset to hold in your portfolio right now. We're going to keep the language super simple, the insights crystal clear, and just dive right in.
Okay, let's dive into this. They state, and I quote, "Digital assets have proven to be as stable as a house of cards in a hurricane." End quote. I mean, wow. Land Limited is painting a very stark, very turbulent picture of today's investment landscape. They're basically arguing that traditional markets right now are totally fractured, and the extreme volatility of digital markets, it makes them incredibly unreliable. If you've been watching the financial news lately, you can probably visualize exactly what they mean by a house of cards catching a heavy wind.
So here's our really quick roadmap for today's explainer. First, we'll cover the 2026 market problem. Second, tangible earth versus digital assets. Third, bypassing traditional credit barriers. Fourth, the carry cost advantage. And finally, building generational wealth.
Starting us off, Section 1, the 2026 market problem.
You hear the term inflation hedge thrown around constantly by financial experts right now, but what does it actually mean? Well, think of it like a sturdy anchor in a huge financial storm. It's basically an investment designed specifically to protect your money's buying power when everyday prices shoot up and the markets get shaky. And according to Land Limited, finding a truly reliable anchor right now is harder than it's been in decades.
Moving on to Section 2, tangible earth versus digital assets. And this brilliantly illustrates the core difference in their analysis. At tech stocks, you're essentially placing a massive bet on a single company's board of directors. And that value? It fluctuates wildly based on market sentiment, daily headlines, you name it. But contrast that with raw land. When you buy land, you are betting on the fundamental value of the earth itself. It's a permanent, finite resource that literally does not care about a bad quarterly earnings report. Let's move forward and see how this actually builds into their specific strategy. Land Limited highlights available parcels across a surprisingly diverse geographic spread. We're talking Alaska, California, Colorado, Florida, and New Mexico. We aren't just talking about one type of terrain here. This spans all the way from the vast snowy mountains of Colorado and Alaska directly to the sunny, level coastlines of Florida and California.
Which brings us to Section 3, bypassing traditional credit barriers.
Listen, in 2026, traditional mortgages often require incredibly high credit scores just to get a foot in the door, right? But Land Limited deliberately bypasses these historic banking hurdles. Their owner financing model requires absolutely no credit checks. None. They operate on the philosophy that land ownership should be accessible to everyday people, not just those with completely pristine financial pasts.
And this number is perhaps the most surprising part of their whole model. $99. That's it. They're offering a path to land ownership for as low as $99 a month. When you contrast this incredibly low monthly entry point with the massive, 20% down payments typically required for managed real estate, it's pretty easy to see why the firm calls this a disappearing opportunity in the modern market.
All right, Section 4, the carry cost advantage.
Now, what's really interesting about this concept is what we call a carry cost. That's just the ongoing price you pay to simply hold on to an investment. If you buy traditional managed real estate like a rental house or a duplex, you're immediately hit with this painful three-step carry cost burden. Step 1, property managers take a 10% fee right off the top of your income. Step 2, endless maintenance and repair bills just eat your profit margins alive. And Step 3, dealing with tenants, which inevitably includes those completely dreaded 3 a.m. phone calls when the water heater bursts.
Now compare that massive headache to this number, under $200. According to the firm, when you own raw land, your primary ongoing carry cost is simply property taxes. And in many of the rural areas they specialize in, like parts of New Mexico or California, those annual taxes can actually be less than $200 for the entire year. That's for the whole year.
The contrast is just profoundly simple. There are no pipes to burst. There are absolutely no tenants to call you in the middle of the night. You can hold your financial position for pennies on the dollar compared to almost any other physical asset out there. It's an incredibly low-stress, low-maintenance way to maintain a solid investment over time.
And that brings us to our final part, Section 5, building generational wealth. So the crucial point is captured perfectly right here. Infinite dollars versus finite land. Think about it. Digital portfolios can be compromised or hacked. Fiat money can be printed endlessly by governments, which, inherently dilutes its value over time. But land?
They simply aren't making any more of it. A 2.5-acre lot in Colorado or a parcel in Florida is a real-world sanctuary. Humanity can print infinite dollars, but we absolutely cannot print more Earth.
We'll leave you with this really powerful question posed by Land Limited to end our explainer today. Do you want your future tied to the digital projections of Wall Street or to the absolute reality of the dirt beneath your boots? It is a truly provocative thought that leaves us all pondering what it actually means to hold a tangible asset in 2026. Thanks so much for joining me on this explainer. Keep learning, stay focused, and I will see you next time.